Now, you probably know that gold is a precious metal. It's a finite resource. But do you know just how much gold there is in the world for each person? Well, stick around if you'd like to find out. I can't tell you the number of times this year that I've heard people tell me that they're not buying gold because it's too expensive right now. Personally, I find this strange because no one ever says that about other investments like stocks, for example. Even when a stock like Apple's is at its all-time high, people will still tell you to buy it. But gold isn't a stock, is it now? People will tell you to invest in gold because it helps protect you against sustained high inflation, which we're all currently experiencing right now. While this may be true, gold also helps protect you against something else called the ever-increasing money supply. Now, money supply is really interesting because its relationship with the price of gold can help us determine whether or not gold is too expensive to buy. The money supply is a term we use to describe the total amount of money circulating in an economy at any one point. The money supply can be increased or decreased typically by a country's central bank. When the money supply in an economy is significantly increased, as what happened during COVID, it eventually results in inflation as it creates a situation where too much money is chasing the same quantity of goods. These goods can include investments. However, gold is unlike other investments and is actually very susceptible to changes in the money supply. That's because unlike real estate, bonds, or stocks, gold is actually a very finite resource. Generally speaking, there is a fixed annual production of gold, and though mining companies have tried, they have largely been unable to ramp up production to meet any increased demand. Therefore, when the money supply is increased, a situation arises where you will have a lot of new money around chasing a very fixed supply of the precious metal. The price, therefore, goes up dramatically. So, has the price of gold reached an all-time high now that the Federal Reserve is finally reining in its money printing enterprise? Well, let's take a closer look to find out. For the last 50 years or so, the M2 money supply to gold ratio operated within strict boundaries shown on the graph here. The M2 to gold ratio was at its lowest in 1980 when it reached 2.1. At that point, gold was at its most overvalued, at least according to gold's relationship with the money supply. In 1980, the price of gold was $595, which is equivalent to $2,300 in today's money. On the other hand, gold was at its most undervalued in 2001 when the M2 to gold ratio reached 19.69. The price of gold was $270, equivalent to $465 in today's money. Can you imagine buying gold for that low price today? What this graph tells us is that taking the current money supply into account, gold isn't too expensive just yet, as it only has an M2 to gold ratio of 11.37, meaning that there is still more room for the price of gold to appreciate before gold becomes too expensive to buy or would be considered overvalued. Provided the money supply in the system remains the same, the price of gold would need to appreciate to $3,500 per ounce before the M2 to gold ratio reaches 5. Now, it's time for you to find out how much gold you'd get if we were to divide all the world's gold equally between the 8 billion people of our planet. And each person would get just 0.77 ounces or 24 grams for those of you not from the US. If you'd like to learn more about the different gold investments available and how to choose between them, then you should subscribe as we have a video on that very topic coming up on our channel next week. See you all next week, and until then, buy the gold rush.